Hello, my name is Brian Downing and I'm going to shock you with high frequency trading. Let me give you an example. We are here today on November 10th, 2013. When you look at money at CNN, best mutual funds and ETFs. Now, what we're going to look for is a company called Vanguard, who've become now the largest mutual fund company. This is why I highlight it. PIMCO Total Return loses world's largest mutual holding title to Vanguard. And that was only 1 week ago, or almost 1 week ago, last Monday. Okay? Let's take a look at how Vanguard is dominating the top mutual fund companies and performance out there. So we're going to go through all these blah, 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 all this stuff. But what I want you to start looking at, there's T. Rowe and Vanguard. Vanguard, okay? Vanguard, that's mid-cap. Vanguard, and then again Vanguard. Shall we continue? Vanguard, and that's a bond index. That's where PIMCO used to dominate. Vanguard, and Vanguard, and Vanguard, and Vanguard, and Vanguard. Vanguard, more Vanguard, and golly gee, even more Vanguard. But where does it stop? Vanguard, and Vanguard. Now, you might be asking yourself, how did Vanguard do all this? Well, let's do a search and look up, is Vanguard HFT? This is on Google. CIO, high frequency trading cuts costs. Vanguard exec says HFT helps. Vanguard officially defends HFT and thanks HFT traders. But that's how Vanguard dominates. Let me repeat this. Dominates the mutual fund industry. Now let's take a look at what people think of Vanguard. Vanguard is great. They're incredibly low expense ratios from the foundation of that greatness. Now, you might be asking how they do that. Because people that study with PhDs aren't like computers. High frequency trading changes all that. Not only that, but quant changes it as well. They're a quantitative fund analytical company. So when you combine high frequency trading and quant, what do we call that? We call that next generation trading. Next generation trading. And what do the competition think? T. Rowe is a good example. They're performing really well, but let's talk about it. So the guys over at T. Rowe think it's a threat. Yeah, of course it's a threat. Let's go back to Vanguard, the best mutual fund. Look at how much Vanguard dominates this list. Okay, year-to-date, 5-year return, and look what people are saying. Vanguard is great, incredibly low expense ratio. So you need to ask yourself, on T. Rowe, are they being a bunch of crybabies? Get with the goddamn program. Computers are here to stay, and they are taking over the stock market 80%. Proof of that? Vanguard is it. Alright, so what happens now? PIMCO used to be the dominant player. Those guys over at PIMCO, Bill Gross, Brian, those guys are geniuses. But again, it's the styles of why Vanguard has risen from the bottom, not the bottom, but they are on top. And as I said, PIMCO a week ago lost that title because of Vanguard. Again, because of quant and high frequency trading. Now, how does it relate around me? I call it next generation trading. This is the future. This is the future of how picking stocks, not just stocks, Forex futures, options, commodities, all that is this way. No different than Vanguard. This is Vanguard. This is the modern way, and they are dominating now. Again, because of high frequency trading. So, you need to ask yourself, you either stay with the program or get out of the way. That's one of your choice. But just thought I'd put that message out there, that little bug in your ear, because this is proof that now, in today's era, November 10th, 2013, that Vanguard and companies that do this are doing quite well. Over and out.